Hey everybody, welcome back to Swing Trading. My name is Mike Fairbourn. Great to be with you today. Hey, want to take a look today at really just setting up a simple candlestick, sort of an entry type bounce with the swing trade itself. We want to confirm that though with the whole moving average, but really a lot of times when we are saying the pullback in terms of prices coming back into, let's say, whether it be a flag pattern of some sort, inverted head and shoulders pattern, folks, what we oftentimes will see is that candlestick really representing our range there of a potential entry point if we're breaking above it. What could be, let's say, for example, a hold if it breaks above it. So wanted to really tap into the candlestick and make sure that that's part of our potential entry setups and scenarios here. So I look forward to diving into that with you. And welcome to all of you. We've got the group on here on board with us, folks. Plenty of examples we're going to go through today, placing some example stocks on this setup. Hope to generate some ideas for you going forward, and I actually will on our a couple of our initial examples, take a look at that intraday time frame too, just to see what's going on behind the scenes. That's always so helpful, just to see. It's a lot more difficult to see those daily charts where those candles are just going up bar by bar, but what's really going on behind the scenes. So we'll tap into that today as well. Joining the chat by a good friend, colleague of mine, Mr. Ben Watson. See him in the chat as, there he is, BW. Folks, you can follow us both on X. Ben's handle is Ben Watson CS. Mine is Mike Fairbourn CS. And that reminds me, I've got to post some stuff. Maybe post a little sunset photo as well. All right. Well, with that, let's hit some disclosures here, diving on into this, folks. Let's see. Material here is intended for general information purposes. General informational and educational purposes only. Now, options carry a high level of risk, not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. ITM option has a higher risk of being assigned early. I don't know if we'll tap into options today, but hey, I read those disclosures just in case. paperMoney software application also for educational purposes only. Now, past performance is no guarantee of future results. Dividends are not guaranteed, and there is no guarantee that execution of a stop order will be at or near the stop price. We will be looking at some stop orders today, most definitely for some of our example trade setups. And there's just a quick look at some of the futures disclosures there. Although we don't trade futures, I do like to post them just so that we can look at them. And it does state too, futures and futures options trading does involve risk, involves substantial risk and is not suitable for all investors. All right. Well, let's get rolling here. Let's take a look real quick at the markets. You guys have seen the markets already today, probably a few times within our other classes. I know our coaches do a great job of reviewing those, but you know what we still have here? Gosh, we still have these notification lines sitting up here for this sideways channel in SPX. So a couple of different interesting items that could come up. You know, the tariff situation, it looks like there might be other ways to enforce tariffs. There's not a lot of volatility around the tariffs right there. Waiting to see if we do get some economic data that could be interesting to set us above that 7K level. Folks, we're still in this range. And what we've talked about too, and this is true with a lot of the patterns that we do look at here as well. And that is when we are getting that consolidation. Shoot, I'll just draw a triangle. You can see that tightening of price. Well, same thing can happen up here. And that is representative, folks, of 500 different companies, right? A lot of companies that could be representing that in terms of the S&P 500. NDX is somewhat very similar to it as well, but that's a good reference point. I just wanted to review to take a look at. Now, in addition to that, I wanted to go over here and just highlight real quick, and I use a lot of this in my markets and sectors class, but if we look at the sector grid here, I'll share this link with you guys if you'd like that too. It is not a think script. By the way, think scripts aren't guaranteed for timeliness or accuracy, but it is just a script. It is not a script. These are just charts. It's just a grid chart with a number of different charts on here. As a side note, a couple of quick notes on this as we look at the charts here. This can be very informative too, because a lot of times to get a whole group of companies going higher, a lot of times it is fundamentally based. What do I mean by that? Well, what's behind the scenes? What's going on with the company? How about the balance sheet, the income statement, the statement of cash flows? Those are the big three, right? Well, how are they doing collectively within these companies? If we look over here, and I'm going to look at staples. In fact, what we'll do is we'll zoom in on that. Now that you guys have that, let's click up top. I'm going to zoom down here and I'm just going to say maximize sell. There you have it. That's kind of like we saw over here. A little bit of some of the patterns that we look at in this class, a little bit of a side, kind of an upward, kind of a sideways pennant, but we might end up seeing within a basket of these consumer staples. And we looked at it actually last week, was this, a flag type pattern amongst several in here. I want to say there's maybe roughly 50 or 10% of the S&P 500 are staples. It could be, wait, maybe it's in the 60s. Don't quote me on that. But you can see that we might be getting a lift off here, which could be an interesting area. By the way, you know, we looked at, like last week, for example, here was one that we talked about, KDP. I talked about MK. Let's see, there's some other ones in here too. We'll pull these up. But KDP first on our list. By the way, before I do that, another one, a little bit of a flag. You know, you got some real estate there too. But over here, without diving into real estate, I just wanted to highlight, you know, utilities. Utilities had really sparked a sharp move to the upside. Meant to go sideways there. Okay, there's your move, consolidation. We might be on the verge. Now there's a T1 target right there, right? We talk about these frequently enough. T1, we might be getting some other moves coming out of this base. Remember what could be drivers behind this? We just talked about fundamental drivers that can kind of create these long sort of stretches at times, trends going up, and that within those, wow, a lot of flag patterns, a lot of other patterns, which we're going to discover today. Many of the bottoms are coming in here and throwing at us, for example, a candlestick, for example, a doji at the bottom. And those are oftentimes the representation of our possible close above the high, the low bar day. Right there. So we're going to dive into that a little bit, but behind this, yeah, AI is driving a lot of energy requirements for utilities. And also, remember what we had going on? We had, the administration, President Trump is trying to get in a different individual into, let's see, yeah, to be the chairman of the reserve in anticipation of cutting interest rates. Well, utilities, folks, are capital intensive. What do I mean by that? A lot of capital. First of all, there's a lot of equipment that goes in behind utilities. And a lot of this is financed at a, oftentimes variable, but on a 10-year base, a 10-year bond, for example. If rates go down, they can refinance. And if the anticipation is a new Fed chair coming in, lowering interest rates, well, that can put some fire here. There might be more than one kind of driver in here as well. So let's head on back now and just take a look at our trade from last week. This is Dr. Pepper Korig. And I did place a trade on this today. This is one we had set up, but I'm going to show you because we were waiting for earnings on this. This is kind of in the line of consumer staples. I'm going to dive right on into utilities right after this for our example trade that we looked at previously on one of our companies here. But this is KDP, so Korig, Dr. Pepper. And our consumer non-cyclicals, to be specific. But you'll notice we did have an earnings announcement here. We jumped above our range. What we saw previously was a little bit of a cup and handle. Oh, and there's the end of that handle right there, which is a what? A flag type pattern. That's how we can kind of recognize it. If you get the rounded bottom over here, saucer bottom, that can help you recognize the remainder of it. But we were waiting on this for an earnings event, and we got it. Market responded positively thus far, and we did get a little bit of a volume spike. In addition, a little bit larger bar on the day. Now, here's kind of the interesting part. We talked about looking at some of the fundamentals. Well, we just got some fundamentals, but let's dive in a little bit deeper into, let's just say, a shorter term chart. You guys can see up top. This is just a cool way too. If you ever want to look at like a weekly chart, or in this case, daily, 30-minute, 5-minute. Actually did slip a weekly on over here on the far right, but that's kind of beside the point. I like to throw that in as well, but there you go. You've got this setting up. I want to just take a look and show you something here in terms of what we saw here. And I'm going to show you where a potential bounce entry could have occurred. Now, did we get a close above the high, the low day? I think we might have over through here for sure, but here is the gap. Now, we're breaking this down I'm going to just rewind for one split second to show you. Do we have, based upon this cup and handle pattern, more room to potentially go to reach our target? We do. In fact, I'm going to pull this potential exit level up there with our limit right near that point, right, for a full run off of this. Now, this is the cup and handle. For example, if it was just a flag pattern, well, the range would be probably something like that because we're measuring this leg. Okay, so it could be a little bit lower. You could say just sub the 33 level right there if we were doing a flag pattern retracement, but we're going to stick to the cup and handle as it stands right now because we do have possibly a cup and handle over here. Okay. So we're waiting to participate for a continuation of this rally. Okay, so this is kind of like, we talked about it previously, but we were waiting for this move, but I took this trade right here. Now, here is your 30-minute. What do you see? It gives us a lot more data points. Here's your rally up, consolidation. We have another breakthrough here. Now, trade was put in. I put a trade on in here, and you can see it was for 100 shares in our paperMoney account. And the anticipation is that target. You can see it right here, just extending higher over here. Now, I've placed the stop below the low of today's bar. Oftentimes, when you're going to get this kind of a big volume spike, and you guys can see that sticking out right there with earnings, the daily highs and lows can be interesting areas for a potential exit or to add to a position. This is the way some traders would look at this. Let me just zoom back now to a daily and show you. That's our exit. We had a big volume day, right? Huge for that earnings. It's big. Now, if we go below here, hey, it didn't quite pan out or do what we thought. Now, it might come back down and bounce back again off that 30, and somebody could decide to take a trade off of that, right? For example, but we're looking at less than, in terms of a risk to reward ratio, potential risk to potential reward, we got in roughly about there and down to here. So I'm just going to eyeball. It was close to approximately a 60-cent exit, or that's where our stop is at, potentially getting out at that point. By contrast, on the reward to risk, trying to get out potentially at those levels, does that work in our favor? Is it at least a 2-to-1 or better? And I'm just inching up this range to show you how many approximately this could be. It's maybe like, let's see, so you got 1, 2, 3, 4.5. So it might be a reward of like a 4.5 to a 1 if we hit our target. Potential reward, 4.5 on a scale, units to run for every one that we're risking. Could that work? Yeah, well, in this class, we like to do at least a 2-to-1 reward risk ratio. Oh, that's a 1. 2-to-1. All right. So I've got that trade in there, and that's kind of the scenario that's set up for a post earnings rally. And this group, what did we just get through saying? We just looked at it. It was the staples, right? The staples, again, just as a quick reminder, looking at those staples, consumer staples, well, they're kind of flagging a little bit over here too. It's funny, they're right at the big $1,000 number, $1,000 level, collectively, all of those. But that could be an interesting kind of a move, perhaps, if it does break out, because like the sector's showing some strength. And right now, we're just seeing some follow through with a stock that falls in that area, KDP. So kind of a long discussion on that here, but I wanted to highlight this. Now, a quick note, because this is going to blend into our other discussions here. Do you see off the bottom? Folks, and many of you guys are very just naturally good at picking up at some of these candlesticks. I'm not really seeing a candle here, not really much of one here, not here. But notice down here, what is that bottom rung that we're looking at here? Keep in mind, it was pre-earnings. Now, the sector was running, so there could be some good fundamental strength behind it. We don't know. Turns out, as of today, there was. But that's a candle. That represents, these dojis represent really kind of a battle between the bulls and the bears. It's kind of a tug of war. In other words, we're just using a single candle down here to really clue us in and say, what's going on there? The cool thing is sometimes they do come in pairs. I've seen 2 or 3 before, but it represents what we're kind of seeing up top. I'll paint it in red here. See the pullback coming down. Okay, now all of a sudden the bulls are battling back, and why do we know that? Because the doji is giving us that indication. It's saying, well, yeah, the bears hit it down here, but up top, the bulls came in too during the day. So it's kind of blending back and forth. There's the potential follow through right there from that. Now, what else do we get on this? We get a close above the high of the low bar right there. That is what a lot of traders will wait for as a possible confirmation entry point. Okay. Now, again, you would have had to feel fine ahead of that. A lot of times we're post earnings, but this was pre-earnings rally. Again, sector was strong, so fundamentals could have been stronger. I mean, that's one factor that some traders will look at, and it was. It ended up going okay. Does that make sense, folks? Target, stop. If we're dead wrong, it might pop down here, and some might just say, "Hey, Mike, you're so close to the 30. Just give it a little bit more room." I'm just keeping that stop level actually quite tight relative to the potential reward here. The other thing I would say too, ooh, this is interesting. Look at this with me. Okay, I'm going to and we're going to move on here real quick, but look at this. If I just I'm going to paint this guy out as a flag pattern off the bottom. Why aren't you working? Third time's the charm. Okay. And if I take this, I duplicate it, and I pull it right up here to that low, where does this put us at? This is interesting because look at this. See that level? Instead of maybe this target up top, folks, I'm going to adjust it. I'm going to adjust it. Although this looks like a lot like a cup and handle, and it could move up to that level. Look at this. That is a major gap down. Actually, can't believe I was that straight of a line across my screen there, but there you go. Getting used to this mouse. That's a gap, folks. That can be resistance. There it is. I spelled it out in big letters, resistance. Do you see over here too? Where did it gap down to? Right there at this prior range. Fascinating. It's an interesting point to kind of consider. Anyways, there you have it. It's not unusual to get this kind of a move too, as prices are just determining, hey, what direction are we going to go? Last point I'll make, I swear, and I'm moving on. There was just a lot. This was like the Christmas tree. It has a lot to talk about here, and it's actually one of the trades we were just looking at, a way to play post earnings. If you run up above this point, this is the area right there that some traders might buy into. The interesting thing is that area was actually this area earlier in the day, 30-minute. There it is. Where was it? It was right here. And what did we do? We played this flag. So in a sense, we already took out that level. You see it's kind of gaining, maybe it's kind of slowing down again here. That is, supposed to draw. That is the question. All right. So how do you feel about that? So this is a way to kind of play post earnings, waiting for the rally after earnings, and still, I mean, but not giving up that potential reward. In terms of potential price action going higher, doji, you guys got it. Yeah, dojis. That's right, Jay Rich. Yeah, it's plural, right? There can be more than one. And a lot of traders just say, hey, that's more conviction that we're slowing down right there. And that's kind of what and then what did we get right after? The follow through. It happened right after the fact. Now, you guys, I sent this out as it was a tweet, I guess you say it, an X type on X, a post here. This was one that did have a simple moving at one of the bigger ones, I got to say, just half of the 200. It's very common amongst a lot of traders, and that is right here. Let's just see it. There it is. So, sorry, it was the 200. What am I doing? This one was the 200. There was one that was the 100. 200 is even probably maybe even a more common one. You can see it right there. We came right at this point, draw a line through there. McCormick, 200, sitting on this level right here. Do you see the possibility of a flag breakout? Let's just pull these colors away, and I'll highlight it here for you. I'm seeing a flag. Here's the flag right here. Possible double bottom right here and right there. Target wise, I mean, T1 target right here, a full T2 or target 1, target 2 up top. So we have not put a trade on this. Let's take a look at this one though for the possibility of an entry point, but I'm going to add in one additional component here that we haven't talked about before, and that is the whole moving average, H-U-L-L, not the whole moving average. It is the whole moving average, the H-U-L-L, which some of the traders have talked about. It tends to be a little bit quicker on response. It tends to be a little bit sharper on the return to snap back, but it's also smoothed a little bit as well. There is some math behind the scenes here, but if you just go into whole over here, we'll add this on. And what I've been using on these, just for swing trades, I'm actually using the default of a lot of indicators that were introduced in the 1970s. The RSI, introduced by Wells Wilder in 1978, a book that he had in 1970. He had some others in there too, like the ADX. But the funny thing, they tested this and they just said, you know, people have all different kinds of ways to do it. But I'm just saying there was not that this is correct, but a lot of people test a lot of different things. But one of the ones that they did use that they talk about was just the 14. And there was, by the way, there were a number of different books. I'm not naming one particular book out there, just as a side note, right? Didn't name the name of a book. He talked about it across a lot of different spectrums, not even necessarily a book, but it was in 1978 that he talked about that. It's a 14 period, which was funny because they said it's half of a moon cycle. Basically, it's just half of a month. And if you think about what's half of a month, 14 days, 2 weeks, 2 weeks. So it's just like taking a month and cutting it in half in terms of actual calendar bars, calendar days. Now, I'm going to go ahead and put this on here. I'm going to cut that 200 for now so you guys can actually see it. But just a quick note, not emphasizing any sort of a specific number there. It's just it was one that was commonly used early on is the best way to say it. Yeah, the 14 period, although it's not the default here, but there's your whole. Now, what we're looking for on the whole, using that half month period of time, is this right here. Now, this is a candlestick right here, and this could be even stronger than a bullish a doji. That, folks, I think many of you know what that is. That's an engulfing pattern, right? A bullish engulfing pattern, where you're engulfing the entire day's range within the body of the next candle, right there. Okay. Now, before I go any further on this, can you see that we are getting above that level right now? Then that's not a guarantee, but it can be some level that traders say, okay, when I look at these swing trades in terms of an entry, I'm waiting for that. I need a big enough bar to help center that and kind of prove that for me in terms of what a trader might be looking for, in terms of their expectations. It really doesn't prove that it's going to go up, but it might be based upon their own singular expectations. Like that's something they use. Go back and you can test this. If you're looking for swing trade moves, right, that are big enough, cross over above that level. Sometimes, not every time, that hole can be interesting when prices just barely get above the bottom. And in this case, what did we have? Breaking above a range, 200-day, ... right, through there. And it's all based upon, you got the hole there, but it's all based upon breaking those highs, resting on those highs. What am I drawing? I'm drawing this. Flag pattern, you guys got it, exactly. Wiley's got it. There was a Cahold too. Yeah, you're getting the Cahold off that prior bar and using that simple candlestick off the bottom. That's the representation of our bar. Now, I can't say, oh, sorry. So the Cahold is very, very close. It hasn't closed yet, so I need to note that. It is not officially a Cahold just yet, but it's very, very close. It's funny because it's above the hole, but not a Cahold. Terms are getting crossed there, but there you go. And you know, the day's not over, so is it technically really closed above the hole yet? No, it hasn't closed above. It's just currently candlestick right there that we're looking at as a base. Well, that's a lot of talk. Let's go ahead and put this trade on here. And one last quick note before I hit it, because I'll jump right back to area. But if you come over here, is this fit into the consumer staples? I'll tell you what's in the staples area. It is the food industry is in there. Okay? That is a segment within there. So there are two back-to-back right there that could fit in with that setup that we saw. You guys can see it in your minds now, right? I can see it in my mind. We just looked at the consumer staples a little bit ago, kind of jumped up, went sideways a little bit. Well, this is one that's been down for a little bit, but sharp break here post earnings. It didn't do great on earnings, but I think the guidance something might have happened. I don't know. Have to look into that a little bit more, but let's set it up. Okay, so there's a couple of different things we could look at. We could look at a stop below the range to try to get out below here. And then we know where our target would be if it's going to be a T2 target. So let's pull up the T2 right now. Here we go. Off the bottom, click and click. Copy. I'll just duplicate it, pull it over here. Whoop. Pull it over here. It's not letting me click it. I'll have to duplicate it even again. There we go. Okay. So right there. So about 80. We shoot up right to 80 there, given everything we're seeing right now, and assuming that it will close above that level. But it just hasn't. We don't know yet because it hasn't closed yet, but it's close. It is close to going one way or the other. All right. So let's look at this before I even put that trade on. We'll know where we're at. So this is about 67.50 below. So the potential risk is about right there. So you're really looking at about 2.5 points to the downside. If we were to do that, look up top with me. 1, 2, 3, and possibly 4. Can't quote me on that, but it could be approximately close to a 4 to 1 potential reward risk ratio. So let's put it on. Here we go. Right click, buy custom OCO bracket. One thing that we haven't really dived into too much in this class is how much we are risking. I've been focusing a lot on the technical setups because I know you guys have different risk parameters, but that can be a very, very important component as well. How much are we going to risk relative to, let's say, our stop level from where we're buying, based upon the price of the stock. So let's just take a look at this right here. There is the dialog box. I'll go ahead and send that through. There we go. We'll see what this looks like on the chart. Now it is set up pretty close. Okay, so that lines up about right to what we have. All right, so that was our first trade here. Now we have some other stocks that are doing, okay, PHM, I'm going to leave that on the chart. I'll leave on the chart the whole moving average right there. And let's see. Oh, yeah. Just looking at some comments here. Yeah, many of you do use the bracket. The one cancels the other order, right? Is what it OCO. That's what just the OCO. I think it might have meant somebody might have had that question, but OCO. Okay, here is another scenario here. We've got our hull on right now. Do you see a candlestick? Do you see one that might be there for a hold? Let's zoom in. Not like that. How about like this? Do you see one there on a potential low that could give us our hold setup? And what is that candlestick, you guys? Which one are you seeing? Why are you typing that in the chat? Come over here. What else did we do? Well, I'll tell you what. We've been making higher highs and higher lows. We actually cleared this high over here too. So a lot of times you call that like longer term resistance, especially if you don't close above it. We actually had a few closes above it, right? 3 days or at least, probably above this range or approximately. I'm talking about these bars right there. That's showing some strength. And from that point, we've begun to hold it. All right. Anybody seeing this with me? That is a candle stick, and that is referred to as a hammer. The hammer, to become a hammer, it's got to be twice the distance. It's not, well, you could almost say a doji. It's so close to a doji where the opening and the closing prices are the same. But as long as like the lower shadow of that hammer is more than 2 times, I'll just say, greater than 2 times the body of the candle, and you can see that that's clearly, my gosh, that's like probably 6 times right now, at least the way it stands. Yeah, I mean, there you have it. And there's your setup right there. Okay, so what are we getting here? Well, there is your whole moving average, and we were above it at one time today. And this is why some traders might wait for a close above there. They could, and sometimes they would take it early, but that again, that is what traders can use to say, well, when we get above it here, is it starting, could there be a swing trade? This one might even be, I mean, notice it's right off the bottom there. Wow, that is right off the bottom. And by the way, that was a hold. And by the way, that too, even right there, you did have a couple of candles. That's like a doji, very much close to a doji or a hammer. This is kind of like a doji hammer. But this is referred to as, it's an inverted hammer is one way to say it. But that too is a candlestick. Those are really representations of the bottom of that hold. And it was a very interesting close above that range right there. So a very simple approach, tapping into what you guys know, which are candlesticks. Many of you are very good with those visuals. Okay, so there is PHM. A quick note on PHM, Pulte. What did we say about interest rates earlier? Trump administration trying to get in a Federal Reserve chair who could do what with interest rates? Cut interest rates. That can be beneficial to a Pulte, perhaps. Sometimes these companies will run. These are home builders. Home builders. So you can see behind the scenes, we can have sort of maybe fundamental signs or indications of strength in there too, to maybe push this up on a macro type theme well within our sort of candlestick setup. I'm going to look at the weekly on this just for the heck of it. Oh, there you go. Okay, so kind of a longer term pullback, a little bit of a zigzag over here. It looks a lot like, I mean, hard to argue with. My gosh, I mean, that's a strong upward trend. But look over here with me, folks. Here's your pullback, right? Like almost like a weekly flag, shoulder, head, shoulder. I don't know. There could be a few of these in here, and then you're starting to run. Now, if it were to run like one of these guys, like a flag pattern, yeah, it could have a little bit more room to run. We didn't get the close, but I'm going to watch it for you guys above this level. And some people would even say, just, they might take it now because they're getting enough signs. But what we're talking about today is maybe waiting just for a further indication of the hole. Okay, off of that mini flag. Again, the target, there's just so many flags out here right now. Flag and left, right. I mean, there's just a lot in the market right now, but they are kind of in these sorts of groups. If I did a flag, it'd be something like that. Maybe a little higher if I'm getting that right. Okay. So again, building on insights or indications are the way that some traders will do this. And that trend too, like we said, it had taken out prior highs. So that one, maybe a watch list category. By the way, I do have another one here, Mondelez. This is another consumer staple. You can see here that it too, a little bit of a harami pattern right there. This body fitting inside of this body. That first candle reaching our low. When did we get the confirmation when did we get the indication? For some traders, they use it as confirmation. It really depends, but it's just like of that whole moving average for the possibility of a follow-through swing, right there. And it closed there yesterday. Now we're getting a follow-through day. So some would say, yeah, hey, maybe they could put on a small position here in anticipation of T1 target or the higher target equivalent to the pole of the flag right there. Okay. Yeah, and by the way, it is a good idea to be looking at, and I like this point coming up in the chat. Sometimes you can be looking at double top levels. You can be looking at resistance points because those can be areas too that some traders will oftentimes, they'll just take profits if you hit that level. For example, what if we had a rally over here? Like this is a really interesting point. What if we come over here, here's a 65 right there, okay? Somewhere in between 64 or 66. And we run up and we hit that level right there. And what do? We start throwing off at resistance, which could be like a double top range, for example, just as an example here, of resistance, and we start seeing a series of exactly what we've been discussing today, candlestick patterns hitting at resistance, which can mean, a reversal. Candlestick, you've heard of candlestick reversals. That's what it could be at a level like this. And so some might decide to try to lock in gains there. In this case, it'd be paper money gains. We're looking at gains, but some would say take half off the table because shoot, it's at resistance and it's throwing me some signs. The other thing is well, if I get back if the whole moving average prices cross below the whole, then that'd be another sign at that level. Instead of just sitting there waiting for the full T2 target to unfold, we can be waiting for that whole moving average to maybe say, get out early. This though too, guys, Mondelez. Remember this one? This is the Oreo trade. Yeah, the Oreos, right? Yeah. That's consumer staples. And so that's one. Here, let's hit a couple of other big names. Caterpillar, really flat. Where's our low bar? What is our low bar? It's very, very much a candlestick pattern. I'll really zoom in to show you. It's not quite a hammer, but it's certainly, I'll just say it, a hammer-ish. You got a shooting star, an inverted hammer right after it, and you're flattening out. Now, are we for the first day on cat? And cat's had a big run, but for flag patterns, that's what a lot of these traders look for because they like that pattern, what the price pattern does in terms of giving them an upside projection. So if it's a big move like this, a move like that to that, and that's quite the price range. If we take that price range and really measure that off the bottom here, right there, well, there could be some potential for that pattern to move. And yeah, we're moving up, aren't we? Something like that. Let me just show you real quick. Right here, and here to here. This is going to be kind of hard to trigger. We're heading up to like close to 1,000 approximately. I don't know if it'll hit 1,000, but I mean, it's like, I don't know if that's the projection exactly, but you got it. You guys, where are we at? What is that doing for us right now? That's the low. Let's really zoom in on this. This might look really weird, and it does look weird. I'm sorry. I don't like to see it that way because I think, there we go. That's what I was after right there. Where's the low of this move when we're talking about the Cahold? Lower low? Not a lower low, not a lower low. Lower low. Cahold again. Close above, that's the A, above the high of low day. How are we doing today? Is that our low day on the pullback? It is. So now we have to go to the high of the low day, which is right there. Just that little teeny blip off the top. I'm going to try to draw a straight line, which is not perfectly straight, but you guys get the idea. We could close above the high low today. We haven't yet. We tested one. We tested two. Here we are again, and we are above our, what's this line? Oh, that's right. Oh, shoot. Yeah, that's right. The whole moving average. We're also getting there too. That's a very, very tight range, you guys, we're looking at. I'm going to put a trade on that. It's a very, very expensive stock, but let's just put one in here. I'm going to actually put this one towards the bottom of just this bar alone. We're going to keep this tight. So if we go below here, that could be our potential exit. Our target could be substantially higher near that 1,000. I've got to do us, and then we'll be all set with our trades today, but let's just do it. Let's set this up right here. There's our high. In anticipation of that close, okay, I'm going to just activate it, move it right over there to that low. Oh, I was way off. See, that's why you got to do the measurements. I said 1,000. I'm only off by like 100. That's a big number. So, but anyways, we said approximate, but there you have it. Okay, we're so close to that level, but it has kind of a couple things we're looking for. Let's narrow this down. I'm going to use a 25 on this one, 25 shares. Could be even less, depending upon what we're looking at, right? First things first, good tail cancel on our stops. Now over here, I'm going to adjust this. We're going to go right to a 25. Click, click. There you go. So 25 across the board. We're going to set this one out to about 7, 7, 6, 5. Yeah, give ourselves some room. And this guy, you can see, that's going to be quite the target to a T1 target. Folks, confirm, always read that order dialog box. Look at those numbers. And that's, I mean, in terms of what it states right there, buying power effect, it stands right there. You can see where that's at, just under 10,000, even for just 20. This is not a cheap stock. Okay. And there you have it. So I'm going to do this right here. I've got to actually pull that stop down a little bit here too, on the downside one below that level, right about there. Okay. But there you go. Plenty in terms of a potential reward to a potential risk trade right there. I'll pull this way down so you can see it. There it is right there. Okay. The risk slightly small, our bubbles are getting in the way, but you can see where that target might be. Oh, shoot, it's a little higher. Okay. Just a little bit up there. A little bit higher. I wasn't quite off as much, but yeah, there you have it. Okay. Everybody, this is what we talked about. Yeah, it is still very high, and it's just that swing trade, and that's quite the move. But this is kind of a nice little consolidation. We're holding a lot of our ground, kind of like a bull flat. It's really holding a tight range as opposed to a bull flag. But folks, today we did look at a few trades here today. We put quite a few, and we had some to look at as well. Oh, one last one, just Dow. I'll just throw it out here real quick. Dow, chemical company, kind of a pullback here. There's your hammer. There's your whole moving average right at that 14 range, kind of bouncing a little bit here too. Oh, what am I doing? I'm losing my mind. All right, let's see. I'm just going to go over here, and I'm going to go up here. Just folks, yeah. So be sure to follow Ben and I on X. There's my handle right there. I'd love to have you guys on board. I am due for a sunset. I've got a couple to share, actually, the last couple of days. But I wanted to post this in here. Great to have you on board, folks. There is a survey in the chat. If you get a chance to fill that out, it's just 2 quick questions in there. In addition, if you like today's discussion, you found it valuable, helpful for you, just smash that like button. Lets me know that this kind of content is helpful for you guys, and would love to have you on board with our Trader Talks channel. You can join that right over here. I'll just highlight this here for you right here. So take a look at our Trader Talks channel. Love to have you guys on board. I'm going to go ahead and just click up top here, but you can subscribe right here if you're not already subscribed. By the way, there was our fill. I just heard it behind the scenes. Okay. But today's program, folks, if you found it effective. Yeah, our sessions run about 40, 45 minutes, but it was awesome to be with you. Thank you, Ben, for your help as always. And folks, thanks for filling out that survey. And hey, look forward to future discussions. Have a great rest of the day. See you next time.